Welcome back. February 23rd, 2026. Let's go over the trades we took today and talk about the market. Now, we're in a very, we are in, I'll say this. If we had a gauge for drama, it's at a maximum right now in terms of, it's near maximum because one, we have the Trump tariffs going on. Two, we have global conflicts that are between Mexico and America and Iran and others as well. I mean, we've got a lot of tension, a lot of energy. There's a lot of things going on right now. On a purely technical basis, if you look at, we'll just take the SPY for example as well, because the SPY is very, very commonly referred to as the benchmark. If you just take the SPY right now, you can tell that we are in a consolidation. Okay, we haven't been going up or down for literally 4 to 5 months. So that's a pretty interesting stat to think about. 4 to 5 months, we haven't gone anywhere. The market hasn't gone anywhere. We're in a consolidation. Just use your mind's eye, ignore everything, just look at the price action. Every one of these bars is a day. What do you see? This is a congestion, this is a breaking point, this is a turning point. This is the definition of drama and pressure building up. That's what I wanted to emphasize there. Not to go on too much of a tangent, but in terms of the NASDAQ, we've been going down for a while. You can see that tapering line right there. You can see it with your imagination. Don't need to draw lines a lot of time. So we've been tapering down. We've been fighting against this selling force, and you can see the fighting. How? How can you see it? In the momentum. You look at the momentum. Momentum is building upward. Volume is remaining overall green the past week, 2 weeks. Today we had a sell-off, but it's important to gauge where we are. We're really in a no man's land. This is a middle ground tug of war. It's a 50-50 scenario every single day. I don't care if this momentum flips up and crosses green. That doesn't, until we make higher highs, nothing matters because of all of the tension and all of the drama. So on a daily basis, we don't have much of a bias to go off of. So we just go off of our technical awareness, and we just go off of our strategy. We just work the strategy and see what happens. Okay. Look at what happened in Nasdaq today. We open up. It's a 3 minute. This is a 5 minute. This is a 3 minute chart in the Nasdaq right here. We open. We have a sell-off. Strategy came into effect right here to take a short. Why did it come into effect? Because our 5 minute time frame started showing. No, disregard that. This is off. This should have been shifted to the right a couple. This was wrong and it got shifted. This should be right here. So we got our signal to go take a short. Why? Because here we're on the right side of the momentum. Everything is selling off at this point. Look at the 15. Look at the 30. Look at the 5. Everything's selling off. This is a full fractal 4 alignment. And then what happens? The final trigger, the 3 minute. You could use the 2 minute if you'd like. 3 minute has a volume confluence, volume bar greater than the previous 3 on the right side of the momentum. So this was the entry today that I failed to take. But my goodness, what a win that would have been, right? Good trade. And then what do you see right here? What is this? What do you know? What do you see? We have a triple bounce, a triple rejection on this line. I put this line here before the market opened because that line is the previous market day's low, where we had a huge rejection off of. You see how these critical levels are important now? The dark blue, medium blue is the pre-market low, but the light blue, where we had a triple rejection off of today, was from the previous day's low. Okay, once you start understanding these critical levels, these previous days' highs and lows, a lot of things start to make sense. I'm sure you're already noticing, if you are paying attention and if you're actually focusing right now, I'm sure you're noticing how the price action is playing around with the pre-market low. This is the pre-market low, dark blue. This is the previous day's low, light blue. Look at what's happening. No words need to be said. You just have to look. Just look. We're going to go over the trades I took today, starting right now. First trade I took today was in Palantir. I caught the sell-off. The sell-off was happening in NASDAQ that I just told you about, that I missed the trade on. That sell-off was occurring at this time, so I took the trade. Now, I was late. I should have entered here, and I didn't, for some reason. I don't know why I was late. That's horrible, but it's the truth. So I entered right here, because we had another volume confluence. We're on the right side of the momentum. The 5-minute is working down, not going up, it's working down. 15-minute deep in the red. 30-minute is completely unbroken. Expanding, unbroken. It's a good setup. Enter at the close of the candle, stop loss slightly above. It barely hit the target. But it did hit the target, ladies and gentlemen, and that is a win. That's also probabilities. Now, had I entered at the correct time, which was right here, then my rewards would have been even better because, I mean, look, we hit not only the first target, we hit the second target, we hit the third target, we almost hit the last target. I mean, so I entered late, and that sucks. And I don't know why I entered late. I don't know. That's just, it's unfortunate. Then we formed a wedge later on. I'm sure you can see. Look at this. See this? Look at that. Look at this wedge. Wedges form at all times. At all times they form. Every day. There's wedges being formed everywhere. And where you get a spike in volume, like right here, look. Spike in volume, a lot of buying green volume. It's building pressure, and it breaks through the wedge. Okay? This break right here is enough to make enough money to pay all your bills. You see the break in the wedge, you see the volume spike. We're on the right side of this momentum. The 5-minute at that current time, let's see what the 5-minute looked like at that break. 5 minutes in the green. 15-minute in the green. Okay? You got all these signs pointing towards, yes, this is going to break to the upside. Let's see if we get momentum and volume, and we do. Those trades are the ones that pay your bills when you're there and ready to take them. I love wedges. I find wedges all the time. I missed that trade. I didn't take it, but I did see it in real time, and I paper traded it with my imagination. Next trade in the day was in Intel. It was almost a full hit. The trade took place right here on the yellow line as always. Anytime you see a yellow line, that's a trade that I actually took. Why did I enter here? Well, again, I think this might be off a little bit. I don't know why. Oh, I entered here because of a 5-minute candle. That's right. Middle of the day, I'm using a 5-minute candle. So the momentum's tapering against. No, we're not going to enter now to the short side. Why would we do that? The momentum's going up. Okay, boom. Tick down. Finally aligning to the short side. We have a volume confluence at the same time, a 2x3 volume confluence. We enter right here at the close of this candle. Stop loss slightly above. Many targets were hit. This was a great win. I let it ride until the end of the day, and I finally took the final profit at this yellow line right here towards the end of the day. The 5-minute, just so you can get a full breakdown of the setup, 5-minute was starting to reverse, which is what I showed you here. This is now the 5-minute that I'm looking at. The 15-minute had crossed over to the red. And what was the 30 doing? The 30 had broken variance. It broke below this level. Still working down, still working down. This is all aligned. This is called momentum alignment. Going into the next trade. Took a trade in NVIDIA, which was a loss. I took it right here. And you know what? I wanted to take the trade at the candle right before. And that would have been a win. I just didn't have a volume confluence yet. So I didn't take it. But I did take this trade here because we had a volume confluence. We were aligned on our higher time frames, sort of. The 5-minute was aligned. The 15 was tapering away, but still in the red. The 30-minute hadn't crossed over yet, but as you can see, the momentum's going downwards. So we are in alignment. What I want to point out to you, though, is do you notice this triple level right here? Yeah, that's an extremely important event that I just failed to recognize. until I did recognize it. During this trade, I mentally took a note and said, I'm going to enter at the break of these levels right here. I'm going to make this yellow so you can understand what I'm talking about. I said in my mind, I'm going to enter at the close of the candle down here, but in my imagination, I'm going to enter at the break of these levels. This is a triple critical level. So the purple line is last week's high. That's the high of last week. The light red is the previous market day's high. The dark red is the pre-market's high, which is around here. So we reject off of pre-market high. We're coming down, we're building momentum. We break this double critical level. Last week's high and the previous market day's high. This is a double critical level. And I thought to myself, I'm just going to enter here at the break of this level. Had I done that, this would have been a win. Okay? So this is where the advanced intuition, experience, discretionary, this is where all this comes into play. My strategy says to wait until the candle closes down here. That's a loss, and I did take a loss. Had I followed my discretion and entered at the break of this extremely critical level right here, with the momentum on my side, would have been a win. Very important to note. Very important to note. Last trade on the day was in one of the most interesting stocks right now, in my opinion, Open Door Technologies, which is a real estate stock, real estate company. And I want to show you what the daily chart looks like. Okay, let's look at the monthly. Here's the monthly chart for Open. Horribly bearish. What is this company? That's what the monthly chart is saying. The weekly chart is telling you a different story. The weekly chart is saying, hey, there's some serious interest in this company. And then the daily chart, when you look at that, you're thinking, dear God, this has got some opportunities to play off of. This is what traders look for, okay? Notice this critical level right here that I'm about to tag for you. Look at this critical level right here. I'm going to make it bright yellow. That is a previous low, and as soon as we hit it, we reject it hard. We're holding above it. Look what happened. We come back down to this critical level, dip a little bit below, and now what are we doing? We are in the middle of a lot of potential excitement. My guess is that this was the low, and we're looking at the precipice of a new upward movement. And why do I say that? Just look at what's going on in the stock. Huge 1000x run up, an exhaustion cool-off event, but not any regular event. This exhaustion cool-off is bouncing off of a level. That makes it very important. We've got another critical level right here. Okay? These are critical levels that cannot be ignored when we're seeing moves like this. So my anticipation is, yes, we're going to see an upward move in the near future, this week or next week, and it's going to be a bigger move than normal. We're talking huge, huge, huge move. That's besides the point. Let's get back to the strategy. So in the strategy, I entered right here because I saw a volume confluence on the 5-minute. Middle of the market, I use the 5-minute chart. What do I see? We're consolidating right here. We're not going anywhere. We're just consolidating. We're stuck in a block. Now we get a volume confluence, big red selling volume bar, aligned on the momentum. What's happening with the 5? The 5 is tapering off. The 15 in the red. The 30-minute is unbroken. Entry at the close of the candle, like always, stop loss slightly above. We hit the first target, hit the second target, locked in good profits. That was another win. And now look, we were talking about those critical levels on the daily chart, right? We were just talking about the daily chart. Here's the critical levels, these yellow lines right here. Okay? Look at where we are on this chart right here today. Look. Do you think this is any coincidence? That was all the trades for today. I'll see you in the next one. Take care now.